Welcome to BISP Solutions. Today in Oracle Financial Consolidation in Closed Cloud, I am going to tell you about MultiGap adjustments. GAAP is a collection of commonly followed accounting rules and standards for financial reporting. It is applied as standard practice to keep regularity, consistency, sincerity, permanence, prudence, and continuity. There are types of GAAP. First, we have local GAAP. It means with respect to any foreign subsidiary, the generally accepted accounting principles in the jurisdictions in which the principal business operations are being conducted. Next, IFRS. It is International Financial Reporting Standards. It is issued by International Accounting Standards Board. So IFRS were created to bring consistency and integrity to accounting standards and practices regardless of company or the country. For example, there's a holding company A Limited, which has a worldwide business. This holding company A Limited has a subsidiary as B Limited. Let's suppose it is a Belgian company. So the financial statements of B Limited are prepared and published in the local GAAP. But they are also prepared in IFRS for the consolidated financial statement of the holding company, which is A Limited. Next, we have US GAAP. So US based companies are required to follow the US generally accepted accounting principles, which is issued by the Financial Accounting Standards Board. So when we create the application, we select MultiGap if we need to report financial statements in both local GAAP and in IFRS or some other GAAP. Then the system provides the option of manual adjustment, calculated adjustment. So when we select the manual adjustment, the hierarchy, the MultiGap hierarchy would be like this, where IFRS would be the parent and it will have two children, local GAAP and adjustment. So the adjustment to local GAAP for IFRS are entered in the FCCs _ adjustment member and the IFRS amount will be calculated. If you see the properties of local GAAP and adjustment, I have shown here. So the local GAAP, the console operator is addition, and in adjustment the console operator is also addition. So both of them, console operator is addition and they will add up and calculate IFRS. Now the second option is calculated MultiGap, where system gets to calculate it. So here in the hierarchy, FCCs _ adjustment becomes the parent member and local GAAP and IFRS becomes a children members. And the data is entered in local GAAP and IFRS member. The adjustment amount is calculated in the adjustment member. If you see the set property of the local gap here, it is subtraction, while IFRS has console operator as addition. So I will show you this practically, how the adjustment happens. I have set the POV and taken the entity LE01, and here this is by manual adjustment we have selected. So I will input the figures here in local gap 1000 and is in adjustment 100, and I will submit the data. So you see the figures on the IFRS member is 1100, which is total of local gap and adjustment. Now this is the example for manual calculations, manual input. Now we will see how does it calculates when we choose calculated option. So the same POV I have created here, and account I have taken cash in hand. I will input the figure under local gap and IFRS. I'm submitting the data, and we will see what is the figure coming in adjustment. This is when the multi-gap adjustment is selected with calculated option. So the difference of IFRS and local gaps goes to adjustment. And so I hope multi-gap is clear to all. Now moving on to our next topic, It is intercompany entities aggregation. Aggregation option determine how child member values aggregate to parent member. So this option is used to define calculation within dimension hierarchies. The intercompany dimension is created when we enable intercompany functionality. It comes with three members: intercompany top, no intercompany, and intercompany entities. Under FCCs, under intercompany entities, FCCs automatically creates ICP entities that we create for intercompany. Intercompany entities aggregation option is defined at the time of application creation. So if you see the screen is showing at the time of application creation the option of addition, subtraction, ignore. So if we enable intercompany data, we will get these three aggregation options. The consolidation operator for FCCs underscore intercompany entities in the intercompany dimension is based on the aggregation option that we select, and the standard elimination system rules run as required by the aggregation option. So first option is addition. Here the console operator for FCCs underscore intercompany entities becomes addition. In subtraction, the console operator will be subtract. And in ignore, the console operator becomes ignore. So let us see practically what happens when we choose addition. So I have set the POV as LE1 is my entity and LE2 and LE3 is its intercompany partners. Further, I have taken intercompany revenue account here, and in no intercompany I'll input the figure as 100. In the second subsidiary, second intercompany partner, which is LE2, I'll input 20, and in third intercompany partner I'll input 10. And first let me create the connection. Now, as I was explaining, 100 in no intercompany, 20 in the second ICP, and in third ICP 10, and I'll submit it. Now in the application we will give the ownership and run the rule of consolidation. So my parent entity C-01 so LE01 is holding, LE2, LE3 are subsidiary, and the holding entity LE01 has 100% ownership. We will save the changes, and now we will click the rule of consolidation. Entity is LE01, period January, scenario actual, and year FY15, and I will click the launch button. Okay, now we will see in the sheet what is the output. So we can see at intercompany top I am getting 130, which is the total of 100 which we entered in no intercompany, and both the ICPs are adding up to intercompany entities 30, and then the total is 130. So this was the example of addition. So the total rolls up at the parent level. Okay, now after addition, this is I have entered the same figure in intercompany sales, and I ran the consolidation, and my application was set to ignore option. So when the option is ignored, after we run the consolidation, the figures doesn't roll up. You can see this is the parent level. The figure is not rolling up. Only the no intercompany figure goes to the parent level. So basically the intercompany figures gets ignored. And lastly is subtraction. Here also I input the same figures 100, 20 and 10, and the same scenario I have taken, but when I ran the consolidation on the parent level, the figure comes as 70. So it is 100 minus 30. The console operator for intercompany entities is subtraction here. So it becomes minus 30. So 100 minus 30 at the top gives us 70. So I hope both the topics were clear to you. For any queries, you may contact our website www.bispsolutions.com. Thank you.